Today I'm going to teach you guys my simple trend line trading strategy, right? So most time people draw trend line to mark out structures in the market, but my trend line stands alone as a strategy on its own. It's something that I teach my advanced students, and I teach them how to find insane sniper entry just by using my trendline strategy. I've never disclosed it on the internet. This is my first time showing it on YouTube, so I hope you guys find value in it, and then you sit back, relax, and watch the video to the end, right? So to explain a little bit about trend lines help us to understand the overall directional movement of the market. Not only can it serve that purpose if you really know how to use it, but it can also allow you to have insane trade setups. Because if we talk about support and resistance, most people think that support and resistance is all about when the market hits a particular level, which is the price ceiling, and it fails to go up, then it's resistance. Or if it goes down and hits a price floor and it fails to go further down, then it's a support level. Sometimes the trend line can serve as a support and resistance for the market as well, right? So the market can be bouncing on the trend line, holding out on that level as support level, or holding out on that level from the top of the range as a resistance as well. So if you know how to apply it principally and mathematically from what I'm going to be showing you, you can be able to have an insane edge on the market and trade on this market just even with a trend line alone. So trend line typically goes with understanding market structure. If you do not really understand market structure, then you're not really going to have a fair deal in understanding trend line. I think I've done a video on market structure already, but for the purpose of this video, I'm also going to brush up on market structure so that you understand how it goes in confluence with the trend line for us to find insane trade entries. I like to always establish mainly two principles when it comes to trend lines, right? So some people, when they're drawing the trend lines in the market, they can pick the points from anywhere just as it makes sense to them. They can connect one point to another, or consistently when the market has been bouncing off in a particular range, then they draw the trend line to connecting. That's their own belief. As far as it works for them, we got to leave it as it is, right? But I'm going to show you my mathematical principles for drawing my trend lines. So if you realize 2 points make a line, you cannot have a line if you do not have 2 points. If I ask you to draw a line, you need to connect point A to point B, right? So in the market, I apply the same principles. Before I draw a line in the market, I got to have 2 points, and a point in the market represents wick for me. So I draw my trend line from wick. I draw my line from wick end to wick end. But connecting two lines on the market does not make it a trend line. Get the difference, right? 2 points only makes up a line, but it doesn't make it a trend line. If we have a third point coming in on the market, bouncing off around the same range in which the line has been drawn, then we are supposedly having a trend in the market. And that point, you can call that line a trend line. First off, you must understand that you got to identify your line, which is connecting that 2 points. And how do you connect the 2 points? You got to start from the inception of the trend or inception of the market movement, right? So when I say inception, I mean that the beginning of a particular swing direction, whether it's coming from the top side or it's coming from the downside, right? Whether it's a bullish swing or a bearish swing, you got to start from the inception. Inception means the beginning. So once you're able to start from the beginning and connect 2 points and extend that line, then you are anticipating that hopefully when the market comes into that third point, it is going to hold off on that area and bounce off, continuing in the prior direction. And that is a critical point for us to have insane trade entry, right? If you know what to do around that third point, which I like to call the make or break area. Why do I call it the make or break area? I call it a make or break because it is at that point in which the market is going to determine if it's going to hold there as a trend or it's going to break off and perhaps there was no trend in the market at all. Likewise, I just said that you need to play this out in confluence with market structure, because sometimes a trend line can break but structure hasn't broken, and I'll teach you how to adjust that and be able to still think in line with the overall directional movement of the market, right? So without wasting my time, make sure to click in the link in the description to join the KOJOFOREX Telegram community, smash the like button and subscribe to this channel before we go into the technical aspect of this. Also make sure to follow me on all social media at KOJOFOREX, KOJOFOREX, especially on Instagram, because I'll be dropping a lot of gems there, and which is going to help elevate your trading knowledge, right? So like I said, without wasting my time, let's go right into the chart. I'll break down everything I know know about my trend line strategy, and it's going to give you more values and elevate your knowledge on the market. Yeah guys, so welcome to the technical aspect of my ultimate trend line strategy. Right, so for the purpose of this video, we're going to be using XAU USD, which is gold, to do our back testing, as well as on the 4-hour time frame. Right, so if we look at gold, right, let's just zoom this out and then have some clear perspective of what has been happening for some time now. Right, if you look at this clearly, you can clearly see that we have had, there's what, bearish swing lows, bullish swing highs, bearish swing lows, and a bullish swing high, bearish swing low, and currently we're having this bullish swing high. Right, so what I tell you about trend line is that they help us to be able to identify the overall directional movement of the market, and as well as help us to jump in the right direction at the right time when we miss the initial swing movement. So when I say initial swing movement, what do I really mean? You can realize that looking at this is what we would identify as the initial swing movement for this bearish swing, and this is the initial swing movement for this minor bullish swing here, and this is the initial swing movement for this bearish one, as well as this for the bullish one here, again representing the bearish swing, and then this double bottom here for this current bullish swing. So when you are trading, you want to be in the direction of the overall trend, overall swing points. So if you're looking for a trade around this area, you're looking to literally be in a sell position. If you're looking here, you're literally looking to be in a buy position. Here you're looking to be in a sell, and so on and so forth. So if you miss being in the market from the beginning of this swing point, then the best way you can be able to join in on the trend is by using a trend line. And this is what most people teach it wrongly anytime I'm on YouTube. So I decided to take time off to teach you my ultimate trend line strategy. Right, so to not make this video any long one, I'm going to cut some parts and then we just focus on the last 3 swing points, right? Because if I want to talk about the first 2 swing points, we're going to go a long way and it's going to waste so much time. Right, remember that in the introductory part I said for us to have a line we only need 2 points, and then me identifying a line in the market is literally using the wicks of the market. Right, so once you're able to get a 2 point, then the 3rd point become a significant point of interest, because it's at that point that we would know whether the market has a trend in play already, or is just a fake out and then possibly a break and a continuation in the opposite direction. Right, so looking at this, we're going to start this analysis, this very short analysis, from this point in the market. Right, from this very point in this 30th of June 2020, when we had this initial swing high. Right, so after this swing high, what can we observe in this market? Right, we can literally observe that this market pushed up and then there was a retracement and a continuation on the upside. So as at this point, the market has provided us 2 points in the market. Right, 2 points in the market. And where are the 2 points? We can literally see point 1 here, which is like the wick I represented to you, and then here being the point 2. Right, so at that point, what we could have done is extend the trend line all the way to the top. Right, extend the trend line all the way. I should have been using the backtesting tool, but for clarity's sake and not to waste too much time, I just want to use the already played out pattern so that you guys just get the concept straight on. Right, so here what can we observe? We can see that this market made a higher high, higher low, and a higher high, and then the higher low, the 3rd point, came into this point of interest here, tapping exactly on the 3rd touch of the trend line and then rallying up. This area here becomes a point of interest for us to find a trade setup if you know exactly what you are looking out for. I told you guys that usually my confirmations for entry, I teach it only to my sniper entry students. Right, nonetheless, you can see that this market made a move on the upside and literally came back to retest, fled around the trend line again before further pushing up. All these provided us insane opportunities to jump in on the trend after we missed the initial swing point, which was this low here. So The next point that would have given us an interesting entry onto this trend was here. The first one was here, and then the second one was here. So following just this simple rules, simple 3-touch rules, we can see how interesting opportunities that the market can give us to join in on a swing trade, right? So I already told you guys that if you want to understand trend lines, it's usually should be in confluence with market structure. You cannot really understand trend line if you do not really have a proper understanding of market structure. Sometimes a structure can be broken, but the trend line will still be in play. And sometimes the trend line can be broken, but structure will still be in play. Usually what we have is a trend line breaking and then structure still being in play. We're not going to go deep into that aspect now. I'll talk more about that in another video as well. So in this particular example, we can observe that the trend line got broken here, right? At this point, the trend line got broken. At the same time, this was the last structural low that we would have determined if the structure was also going to get broken. And indeed, we can observe that what structure was broken here. So as at that point, then I wouldn't necessarily be looking for the market to continue making these swing highs, right? So we'll just divert our attention to looking for swing lows or opportunities for a sell trade, right? So I'm going to leave this here. I'm going to leave this here, these markups here, and then let's see how the market eventually unfolds and how we could have thought about it eventually, right? So we can see that we made a whole series of consolidation around this area, created some high here and came back down, came back to retest that high, right? So what could we have done in a scenario like this? Looking at the market, we can realize that we have a point here, which is this swing high here, or this lower high created here, right? And the market came back to test that lower high before rallying down, right? So as at that point, we know that our new swing high in this market is just this very top here. So if we're connecting our trend line, right, remember that I said 2 points make a line. So obviously if you're connecting point 1 here and point 2 here, indeed it doesn't make any much of a difference, because look at how steep and close the market is to the trend line, right? So upon adjusting, we maintaining the initial trend line at the very top, because that's the inception of that trend. We can now connect point 1 here, which is this next swing low, the swing high that was created, and then extend our trend line, right? Once we extend our trend line, what can we observe? The market coming back into this touch here, and then eventually what? Pushing down. So here's where most people get it wrong, right? Here's where most people get it wrong. Sometimes most people think just because the market broke through the trend line, there's a breakout and the market is supposed to go up, right? So most people will start buying, breakout traders will start buying, and then this is where the market lures a lot of people in and then literally pushes back down. But the way I teach my students around the third touch, we have specific rules that we follow that allows us not to fall into this kind of a trap, right? But nonetheless, this was a great setup which would have made us a very sumptuous pips in the market, which is about 700 pips if you're holding this trade for a swing low, right? Again, I've told you guys that once the market is trading in a trend, right, and then we're following the trend line strategy, we only maintain 3 continuous points. We are interested in the first point, second point, but the third touch is a point of interest where we're looking for a trade. So after any market low or market high, we got to adjust our trend line. So at this point, we would now not maintain here. So what I literally mean is that prior to this movement, we would have considered here as point 1 in the market, and then here as a point 2. Then we had point 3 here, where the market gave us the opportunity to jump in. But after this point 3 played out, we got to adjust the trend line. How do we adjust it? Is literally taking out the trend line and pointing out to the next 2 points in the direction of the market. So point 1 still at the top, point 2 here where it was previously point 3, and we have a new point 3. So here becomes our new point 2, and now here becomes our new point 3. That is the trend line ultimate strategy that I'm teaching you. That 3 points rules, right? Point 1, point 2, point 3, all the time. Not bouncing off the trend line severally makes it a valid thing or a thing. So once we're treating this as a strategy, we got to always follow the rules and maintain that 0.1, 0.2, 0.3 rules. So on 0.3, you can again see that what we had that perfect bounce off on the trend line consolidation. We have exactly what we look out for around the trend line, so that we do not end up trading blindly. And again, this market gave us that opportune moment to have made as much as let's calculate this in pips, as much as 1,200 pips on gold, right? As much as 1,200. So the way I teach my lessons, we are able to accumulate insane amount of pip movements in the market, and then it marvels a lot of people the way we cut 200, 300, 400,000 pips, and they think that it is it's not true and stuff like that. But once you get to be a member of the community or a member of the sniper session, you realize that catching 100 to 200 pips, 300, 500 pips, even a 2,000 people in the market is as easy as just understanding the movement, right? So if we keep up with adjusting this trend line, right? If we keep up with adjusting this trend line now, we're going to regard here as our new 0.2, and now here becomes our new 0.3. Again, we have a specific model we look out for around this point, which is going to give us indication whether this market is going to hold around this area here or is going to break. And once the market fulfills it, definitely we get an opportunity to jump in on this market around here and revisit the swing lows here. So following this simple rules, you realize that the market has provided us several opportunities. Just following this third touch rules, we had an opportunity to buy here, second trade here, and then we've got a third trade here, fourth trade here, and a fifth trade here, just by following just a single rule, a single trend line rule. So eventually, when we adjust this one, we can observe that the market eventually broke out of the trend line from here, right? So this is why I say that trend line can be broken, but structure wouldn't be broken. At this point, we can see that the trend line, yes, indeed was broken, but structure-wise, the market couldn't trade above this high, and then it literally retraced a little bit before eventually breaking the structure from this point. So now that we know that structure has changed, then we got to now also change our trend line. Now the beginning or the inception of the trend line is not going to be here, but here, because this is where we had the flow of movement all the way onto the upside. So to make this video short, right, let me not really go much into details at this ending point, but if we observe what was happening here again with 0.1, we can see that we had 0.2 here, 0.3, and then this point could have also enabled us to find a trade entry to join in on this swing point, right? Again, after it fulfilled, we could have adjusted it, and upon adjusting it, we can see that we need only the wicks to draw a trend line, 0.1 here, and then we got another 0.2 touch in the market where we can find a unique sniper entry, wick entry to join in on the market just at the very inception before this trend took off, right? So currently we are waiting for somewhat this market to come back as a retracement, tap into this trend line, and if it's definitely has the momentum to push up, see this market continuously push on the upside, right? So if you're trading, you must understand that the utmost responsibility of any good swing trader is to be able to trade in the direction of the market. And like I said, trend lines is one of the tools that helps us to jump into the market at the right time, right? So most people would be interested in breakouts and blah blah blah, but because we like to jump in the market at the inception of a swing point, using trend lines is a very key concept, especially with the third touch rules, to be able to jump in on the market and find that sniper entry with a very minimal risk and find huge rewards in the market. Yeah, so I hope you found this video very interesting. I'm not going to talk much. We'll definitely delve more into this topic in another videos. Without much ado, hope you love this video, and I'll see you guys in the next video.